How to choose a mortgage lender. There's a lot of buzz out there about choosing a mortgage lender. The internet would have you believe it's as easy as push a button and get a loan. But after lending for 26 years, I can tell you it's not that easy. Everyone has their own story, their own financial goals, and you really need to work with a lender who will listen to you, understand your scenario, and your personal financial goals. The media would have you believe that it's about interest rate. Let me help you understand. Interest rate is not the most important thing. Let me ask you this. If the lender you're working with can't close your loan, what does the interest rate matter? We see it all the time. When my team and I talk with our clients, we ask them, what is the most important thing to you? You would be surprised to learn that very rarely does someone say interest rate. Most typical answers that I get are things like, we have to be in our home by a certain time frame. Our lease is up. We need to be in our house by the time school starts. We need to buy a home for our aging parent. We need this for our child who's going off to college. At the end of the day, having a lender that can really build a strategy around what you want to accomplish and your financial goals is the most important thing. Interest rates are fairly close in most cases. Getting the loan is the most important thing. Strategies will vary depending on the lender you're talking to, and not all lenders are created equal. For example, I had a client who was referred to us by a real estate agent because he was denied at one of the big lending banks. They told him that his debt-to-income ratio was too high. He was selling his house and he was putting a very large down payment down on the new house, but they denied him. When I spoke with him, the strategy seemed pretty clear to me. Put less down on the new house and use a portion of the proceeds that he was getting from selling his house to pay down debt. Therefore, we lowered his debt-to-income ratio, and guess what? He got the house. Now he gets this house for his family. The other lender was just like, no, you don't qualify. You don't fit in the box. No strategy, no thought went into how they could get this family into a home. Also, if you're self-employed, you definitely want to work with an experienced lender. Self-employment loans can be tricky. They are much more involved than a traditional straight W-2 type of wage earner. There are more lending guidelines and requirements and a lot more documentation. You don't want to leave this up to a push the button and maybe get a loan mentality. When you're choosing a lender, do this. Call them. Call them on the phone and get a live person that you can talk to. Get a sense of who they are, how long they have been lending. Ask questions. What is their process? Do they have a team? Teams are really important because you're not just relying on one person to answer the phone. Now you have a village that's there to support you through the process. And most important, do they understand your scenario? And don't be fooled. We talk to a lot of clients that maybe have talked to another lender. We recently, right now, have a client who has already been pre-qualified by another lender. Now, here's the deal. This client is self-employed by the loan lending guideline standards. They are self-employed. Well, the other lender did not dive deep into all of the documentation that the actual lending guidelines are going to require. So they have misled this client to believe that, boom, no problem, they're good to go. But guess what? We all have the same lending guidelines when it comes around traditional conforming conventional loans. And what we're asking for that client today in the pre-qualification stage, that other lender is going to have to get to. And they're probably not going to get to it until that client's under contract. And let me tell you, you don't want to be under contract and then find out that there's a problem with the usable income, because when you're self-employed, it's not what you think. So from a self-employed lending guideline standard, there are certain protocols, certain documentation that we have to go through. Again, this is not we, this is the lending guidelines, and all lenders are using these types of guidelines. So being sure that the lender that you're talking to is really listening, asking you really good concrete questions. And the other thing about being self-employed is that maybe you own an S corporation, and that S corp pays you a W-2. It doesn't mean that you're not self-employed. From a lending guideline standpoint, if you own 25% or more of that S corporation in this scenario, then you're technically self-employed from a lending guideline standpoint, which means that we're going to have to move through and get all of the documentation to fit that scenario. I know it feels like a lot, but this is my point. Everybody's got their own footprint. Everybody's got their own scenario. And whether it's self-employed, whether you're a first-time home buyer, whether you're needing to purchase a house for a parent or a child, whatever it is that's going on in your life, you want to be sure you're talking with a lending team that is hearing you, listening to what your goals are, and putting together a financial strategy that's going to serve you, not them. At the end of the day, choosing an experienced lender that can guide you through the process, someone who can help educate you, empower you, and help you accomplish your financial goals is the most important thing, even more than interest rate. Remember, what good is a rate if you can't get the house? If you have questions, please comment below and don't forget to subscribe. I have a true passion for mortgage education and I want you to be in the know. See you next time.